G'day everyone, and welcome to the Path to Financial Freedom, a guide to investing. Today we will take you on a journey through the exciting world of investing, a journey that has the potential to change your financial future and provide you with the essential knowledge to begin your investment journey. Whether you're a seasoned investor or just starting on this path, this video will help you understand the essentials of investing, making informed decisions, and working towards achieving your financial goals. Before we get started, I would like to briefly explain the reason behind the mask and the gloves. You see, I don't really see how, me revealing my identity has anything to do with explaining this video. So therefore, in order to maintain anonymity, I would like to keep the mask and the gloves on. So now that we have that out of the way, let's get back to the topic now, shall we?
Okay, so I have this one question for you. So what is investment?
So investment is essentially like planting a financial seed that grows into a money tree. It's the process of putting your money into different opportunities or assets such as stocks, real estate, or businesses, with the expectation that it will grow and provide you with more money. This smart financial strategy not only helps you build wealth, but also brings you closer to achieving your financial dreams and ensures a more secure future for you.
Oh, thank you for that. Can you please let me know why does investing matter so much?
Excellent question. So, consider this first of all. Imagine you have a jar of coins, yeah? I'm going to use this analogy first. You have a jar of coins, right? And you bury it in your backyard. Years later, when you dig it up, those coins will still be there, but they won't buy you as much as they used to because prices for things like groceries, housing, and education have gone up. That's inflation in action. Now, if your money just sits in a savings account, earning minimal interest, it won't grow fast enough to keep up with the rising prices. In essence, it's losing value. But investing, on the other hand, is like giving your money a turbo boost. It has the potential to not only keep pace with inflation, but actually outperform it. This means your money can grow faster than the cost of living, ensuring that your purchasing power remains strong. So investing isn't just about making money, it's about preserving the value of your hard-earned dollars and making sure your financial future stays bright, even in an inflationary world.
Wow, what an explanation. Thank you for that. But what are the types of investments I can do?
Yeah, there are various types of investments, but I'm just going to quickly give you a rundown of a few of the main ones. The most important one is stocks, and stocks, often referred to as equities, are essentially a piece of the ownership pie in a company. Imagine a company as a delicious pizza. Yes, I'm going to give you another analogy here. And each stock as a slice of that pizza, yeah? So the company it itself is the pizza, and each stock is the slice of pizza, right? So when you buy shares, you're getting a slice of ownership in that company. But owning stocks isn't just about having a share in a company, it's about sharing its success or setbacks. Your returns from stocks depend on how well the company performs. If the company grows and becomes more profitable, the value of your shares can increase, potentially allowing you to sell them for a profit. Now, conversely, if the company faces challenges, the value of your shares may decrease. So investing in stocks is like being a part owner and believing in the potential of the business to thrive. It's a dynamic journey where you watch your slice of that pizza grow or shrink as the company's fortunes rise and fall in the market. Now, the second type of investment is real estate. And real estate is, so imagine you have some money saved up and you're thinking about what to do with it. You can choose to invest in something like stocks or bonds, or you can consider real estate. And real estate means buying physical properties like houses, apartments, or even land. When you own these properties, you have a few ways to make money from them. First, you can rent them out to people. This means someone pays you every month to live in or use your property. It's essentially like getting a monthly paycheck from your real estate. This rental income can help you cover the property's expenses and make you, make some extra money, right? And the second point is that real estate often goes up in value over time. Let's say you bought a house a few years ago that was worth $200,000. Today, because of factors like the neighborhood improving or inflation, that same house might be worth $250,000. And this increase in value is called appreciation. So if you decide to sell the house for $250,000, you've effectively made a profit of $50,000. So real estate is like having an investment that pays you rent every month and can become more valuable over time. But here's the catch. Real estate actually requires a lot of money up front to buy the property, like the $200,000 for the house. Plus you need to take care of the property and handle things like repairs and finding tenants. That's where the management part comes comes in. So the next type of investment is bonds. So bonds are like loans you give to governments or companies. They pay you interest regularly, and when the bond matures or ends, they give you back your initial loan. So like imagine that you lend $1,000 to a company, yeah? And in return, they promise to pay you back $50 every year, or 5% of it, of your initial investment, which was $1,000, and return you $1,000 after 10 years. And this is a bond. Bonds are safer than stocks because you get your money back no matter what. And there are many more investments like crypto and forex trading, which I'll talk about in the future. So let's move on to the next investment, which is mutual funds. And so these mutual funds are investment vehicles that pool money from multiple investors to buy a diversified portfolio of stocks, bonds, and other assets. They provide instant diversification and professional management. Like, think of mutual funds as a way for people to team up and invest together. Imagine you and a group of friends each have some money to invest, but you're not sure where to put it. Instead of each person trying to figure out on their own, you decide to pool your money into a shared investment fund, like a big pot of money. Now, with this big pot of money, you can do something powerful. You can hire a professional money manager who knows all about investing. This manager's job is to make smart decisions about where to put your money to make it grow. They do this by buying a mix of things like stocks, which are like pieces of companies, as I've explained before, just earlier, and bonds, which are like loans you give to companies or the government. Okay, so, and these are mainly the main types of investments that highly recommended.
Thank you so much for your time. But just before you go, can you tell me, like, how can I build my investment strategies?
First of all, you need to set clear goals, and that means you need to define your financial goals, whether it's retirement, buying a home, funding education, or simply building wealth for your family's future. Having clear objectives will guide your investment decisions, providing you with a roadmap to follow on your financial journey. When setting these goals, make them specific. They need to be measurable and time-bound. For instance, instead of saying, I want to retire comfortably, specify how much you need to save up and by what age. This level of clarity will help you determine the right investment strategies and how much risk you can comfortably take. So the second step is to diversify your portfolio, and diversification is literally your best friend here because when it comes to managing risk. And so by spreading your investment across different asset classes like stocks, bonds, and real estate, you can reduce the impact of a poor performing asset on your overall portfolio. It's like not putting all your eggs in one basket, which is a wise approach to ensure your financial security. Think of it this way. If you only invest in one thing and it doesn't do well, you might suffer significant losses. But when you diversify, you're essentially creating a safety net. If one investment underperforms, the potential gains from others can help offset those losses. This strategy helps you achieve a more balanced and stable portfolio, increasing the likelihood of achieving your financial goals while managing risk effectively. And the third strategy is undertaking risk and return. This is essentially to do with investing, which involves a trade-off between risk and return. And generally, investments with higher potential returns also come with high risk. It's crucial to find a balance that aligns with your risk tolerance, because your comfort with risk can vary depending on your financial goals, where you are in your life journey. For instance, if you're investing for retirement, in the distant future, you might be more willing to take on higher risk investments, knowing you have time to ride out the market fluctuations. On the other hand, if you're nearing retirement or have short-term financial objectives, you might prefer low-risk options and provide stability and preserve your capital. Many of you may wonder, where should I invest? Crypto, property, or somewhere else? The answer to this question is simple. It depends on your personal preferences. If you're not interested in property investment, you might consider investing in stocks or exploring other options. The choice is entirely based on your needs and financial goals. Now, investing is a journey that requires education, patience, and discipline. It's a powerful tool to secure your financial future and work towards your dreams. Remember, there's no one-size-fits-all approach to investing, so take the time to create a plan that aligns with your goals and risk tolerance. Thank you so much for joining us today. I hope you'll feel more confident and informed about your investment journey. If you liked and enjoyed this video, share it, like it, and subscribe, and stay curious and keep learning.